welcome to the library. We are here to talk all things impact funds together with Alexandra Nitzlader from Phase. We're really excited to hear more about the differences and the collaboration opportunities between impact funds and how they have evolved. Looking forward to the panel. Here's over to you.
Thank you so much, Sophie. Yeah, welcome you all on our panel on innovative funds. Here in this beautiful library. I hope that those who watch from at home at least have a nice bookshelf close to them. I'm happy to introduce my panelists. We have here Max Heyde from EIF and in Luxembourg. He came in already yesterday. Then we have Hristo Valev, flying in from Bulgaria this morning. He is from Urban Impact Ventures, a Dutch Bulgarian fund. And hello, Christin. We have here you from Zurich, Christin ter Braak-Forstinger. She is a co-founder and CEO of the G Impact Capital Fund. Welcome you all. And
thank you, Alexandra.
Yeah, and maybe we can, for those who want to participate and ask questions in the room, you just do it. And if you do it from at home, you probably had the chance to scan already this link, this QR code, and on Slido, and with the ID. Maybe we can see it once more. We will get the chance, yeah. Here it's the ID library, and this is the code. And yeah, so Max, what kind of developments do you observe from your EIF standpoint regarding developments in funds?
Yeah, thanks, Alexandra, and hi, everybody. So very happy to be here in this beautiful setting, in the inspiring library. So I work on equity investments for the European Investment Fund. So we invest in, we're a fund-of-fund investor. We invest in venture capital funds across Europe. Are one of the largest investors in VC funds, and in investing in impact funds, so social and environmental impact funds, is part of our strategy, important part of our strategy. And in fact, we were one of the first believers and investors also in impact funds in Europe, and it's really great to see. We invested in them, believed in them, and helped them to reach a certain fund size to start their investment activities and actually launch in the market. And it's great to see now that these funds, the first funds we invested in, are now coming back to raise their third fund generation or even fourth fund generation, and the funds are also getting bigger. So when the first impact investing funds were small funds, like 20 million funds sometimes, which is a lot of money, but for a VC fund, 20 million is still quite small. We now see the funds are getting really bigger. We see the first funds raising 100 million or even more, and having a really dedicated impact investment strategy. So this is great, and I think if we look at the development of impact investing over the last few years, there's a lot of reason for being very optimistic and very excited about what has happened, but also what is coming in the future. Because I think we're really at the point where impact investing is getting out of this niche of being like an investment opportunity or investment activity that is considered more philanthropic. Yeah, it's nice, you do something good, but you can't earn money with it, and it's becoming more mainstream. And that's also what Uli said this morning. And I think that's something positive. That's something good, because that means that more capital is flowing to impact startups, for startups that are trying to solve real problems and real challenges that we have in climate and environment in the society. So it's a very positive development. And why is that happening? I mean, why are impact funds getting bigger? I think that's, as I said, I mean, impact investing is emancipating itself from philanthropic investors, which is great, high net worth individuals, family offices, which is super important, but it's obviously a small limited amount of capital. And now we have more financial institutional investors also looking at impact investing. We see corporate investors who are interested in investing in impact funds, on the climate tech funds, clean tech funds, but also social funds, because they have a strategic interest in, through impact funds, gaining access to innovative technologies, startups that work on technologies, helping corporates later to get climate neutral and exactly. So that's all a really positive and good development, and I think it shows that impact investing, we're seeing that there's no longer this trade-off between that you have to sacrifice your returns in order to make impact. I think we're at the point where we have seen that you can actually make return and impact at the same time, that there's no trade-off. And I think I would go further, that in the future, you will even have a problem if you invest without a clear impact thesis in mind, or if you start a business opportunity without a clear impact mission. Because if you don't have impact in mind, then I think in the future you will have to sacrifice returns for not thinking about impact, and that shows that the market opportunity is there. If we look, for example, at industries. Whole industries will need to change. I mean, energy-intensive industries, we heard about the EU regulations, so there's enormous pressure on energy-intensive industries like steel, cement making, on the energy sector, mobility, logistics, the food sector, to become climate neutral. And this represents a huge opportunity also for startups to provide innovative technologies to help these corporates to achieve regulation, but also the bottom-up pressure from consumers who are also pressuring for more sustainable products. And usually big corporates are not innovative enough to make this transition and change internally. So they need startups, and there's a huge market opportunity. On the social side, we also see, I mean, accelerated from Corona, that around education, remote education or digital education possibilities, there's enormous urgent need for solutions around that. There was a huge increase in demand for mental health care, for example, mental health therapy during Corona, sadly, but it also means there's a demand out there. So what we also see is that more and more entrepreneurs, successful entrepreneurs, maybe in a different field, that successfully started and scaled, found a company, are now looking at typical impact topics and starting the next company on an impact topic. So also for impact funds, the number of startups out there that have an impact mission, that are impact driven, is increasing, and the investment opportunities are getting more attractive. And I think that also is a reason why we see we receive a lot of fund proposals, and the number of funds that have an impact mission that we receive is really increasing over the last years. And we clearly see that there's more specialization also. So if a few years ago you were raising an impact fund, I think you had to have a more generalist investment strategy. You had to look at environmental and social topics just to find enough investment opportunities, right, to invest your fund. Today, since the market is getting bigger, we see really specialized funds looking at clean, sustainable mobility, looking at the food value chain and investing in startups that make along the food value chain, the food industry more sustainable. Smart energy is a huge topic, and specialized funds looking at that. We even invested in the first funds looking at the blue economy in particular. So sustainable new technologies, making the fisheries industry, aquaculture more sustainable, or investing in seaweed and all kind of products that you can make with seaweed. So it's really exciting to see that there are really kind of specialized investors, but the market is getting so big that you can, like, impact investing is not a niche anymore. It's a big market, and within that market you have certain niches that investors are also focusing on. So Yeah, I think I would stop here because I think we have a really nice group of people together here, and you're even closer to the startups than we are at the European Investment Fund. We're one step back, so really curious to hear what you observe in the market. And Hristo, maybe I was talking about specialization. I mean, you're the best example, right? You're looking at urban impact startups. So, yeah, over to you.
Max. Maybe we should leave the floor to Christin because she's well ahead of us in terms of preparation. She's already doing some investments with her fund. And then I'll take the floor with a few words about urban impact ventures. Christin?
Hey, Hristo. Happy to do so. So, thanks so much for having me. I'm so sorry. I myself being Austrian and I cannot join in person in Vienna today. I know the beautiful library in the Impact Hub, so I'm super sorry. Very happy to share some insights about our fund that we have launched in Luxembourg. Maybe I would give a quick introduction about myself. I'm Christin. I'm originally Austrian, but we are here working out of Zurich since, so I'm personally here since more than 15 years now, and I'm the co-founder of G Impact Capital. G for us means conscious, holistic, and impactful investing. So we are a pure play, let's say, impact boutique. And the fund that we have launched in Luxembourg last year, it's a SICA Thrive structure. Basically, in short, the investment strategy is that we, with that fund, it's called the Burning Issues Impact Fund, we invest in transformative companies in Europe that help solve the most critical issues of our time, basically the burning issues. And what are those burning issues? We have looked very closely at the study from the Bertelsmann Foundation and the UN, and have looked at which ones of the 17 SDGs are the really critical ones, the burning ones in Europe. And no wonder, right, the climate topic is flagged red there throughout Europe, throughout the countries. But similarly and likewise also a few additional topics like the circular economy, plastic crisis, for example, the food transition, basically. So food technology is a vertical that we look at into our fund. But also everything with, let's say, smart mobility, and everything, of course, in terms of climate relation, in terms of green innovation. So basically, the fund invests in core regenerative companies that have this, let's say, in-baked impact in the DNA of their product or their service that really help to solve systemically things, to help solve root causes, basically. And what we also do is to enable our LPs to create that deep impact. I can super happy to share later a little bit more on our impact value creation approach, basically, as a really the deep impact combined with attractive financial returns. That is it in very short about us. We are a female-powered team. We think holistically, systemically, and we think and act long-term. We have made maybe that's something I should also mention, because Hristo, you basically have just talked about it. So we have recently signed the fourth investment for the fund. This was actually in Austria. So we have so far made 4 investments for the fund. We are currently preparing the 5th investment. And we are also still in fundraising for the next 12 months plus. So this is where we're exactly standing at the moment.
Fantastic. Thank you so much, Christine. So now, Hristo.
Thank you. First of all, I would like to thank very much the organizers for having me here today. Vienna is one of my favorite European cities, so I'm really happy to be here in person, meeting all of you on this great event. As I've mentioned, we are the very new kid on the block, just recently being registered as a fund and started more actively our fundraising campaign. Hopefully we'll be ready to start deploying investments by the end of this year or early in the next one. Urban Impact Ventures has this overarching goal to contribute to the improvement of the quality of the urban life in the European cities. We do that by investing in four verticals. One is mobility. The other one is livability, meaning all that these things that can give a better life for the European citizens. We also look for investments in digital infrastructure, where we specifically focus on civic technology, on technologies or products that can allow for a better and more inclusive citizen participation in the decision-making process in the European cities. And the physical infrastructure, but not large and heavy infrastructure projects. More the digital part of the physical infrastructure is within our focus. We will be investing in late seed, pre-Series A and Series A rounds, meaning that we are looking for already validated technologies and ideally some market validation as well. Like revenue generation or just at the stage of pre-revenue generation. Why urban? As I said, we think that this is one of the I would just borrow the term from Christin, one of the burning topics, burning issues, because more and more people are relocating to globally to the cities. There are estimations that close to 90% will be living in the cities in not so distant future. So we need to prepare our cities for that. We need to give the opportunity for our cities to offer to their citizens a good quality of life, to make the cities more resilient, more adaptable to the climate change. That's why the urban transformation agenda is important, and we strongly believe that there is a niche for channeling capital into that direction. Our team comes from different domains. We have pure entrepreneurs as partners, as well as people from the traditional investment management industry, as well as people from the alternative investment industry, if we can call the venture capital and private equity segment of the financial market like that. And we hope that we will help to bend the curve really quick of that important transformation of our cities, to make them really more livable and more resilient to the uncertain future. That's more or less about us. I can share a lot of other things, like what we do on the impact side, how we measure impact, but maybe if there are questions on that specific dimension of our process.
Yeah, maybe I'll introduce my company as well, and also the fund we offer. So I'm from Phase, which is the European financing agency, as a spin-off from Ashoka. We were founded 8 years ago, and we are based in Germany, but also all over Europe. And our role is to be a bridge builder between social entrepreneurs who want to raise financing and impact investors. So we have a whole universe of impact investors, including you all in our portfolio of investors. And it's our aim to bring innovation to Europe by finding the best investors for the social entrepreneurs we are working with. And through our work, we found out that there is a difficult scenario for many of the social entrepreneurs. As you maybe mentioned, Hristo, you prefer, of course, to invest in a certain stage with a certain amount of security, with also, of course, reducing your risk. And this is why we created last year a fund. It's a mezzanine fund. It's called EIF. It's the European Social Innovation and Impact Fund. And it works like following. It's a matching fund. So if we, I give you an example. For instance, if one of the social entrepreneurs we have a mandate with is raising like 1 million of euros, then we could find like direct investments. For instance, that would be 500,000 in equity, and then the EIF would come in and provide a mezzanine capital, which is basically a subordinated loan in the same amount. So it goes up to 500K, and this is a huge lever to get more funds to social entrepreneurs. And it's also nice from the structuring, because the mezzanine is in the accounts of the social entrepreneur counts as equity, but it will be paid back, so he or she doesn't dilute too much. And so the EIF, we started it last year. We are still in fundraising. It will become a 20 million fund, and our goal is to, over the next 5 years, to invest in like 60 startups. We have also a very, very high focus on impact coming from the Ashoka universe. So it's very important that there's a clear theory of change. And so the fund has a lifetime of 10 plus 2 years. And we have already like 8 fund investments done, and 4 more are under review. So we experience there's really, really high demand for this new product. So maybe it's a good time to open the floor already for questions from your side before we get into more detail. No questions from Slido, so maybe we continue.
Maybe I would have a question for you regarding what you observe on the competition side, because what we see is that, as I said, there are more and more funds looking at impact investing, at climate, but also social topics. So we see also traditional venture capital funds investing in impact-driven companies because they see it's a good investment opportunity, and some of the impact funds we invested in actually co-invest also with other more traditional investors, and it shows that it's becoming more mainstream. I mean, even Sequoia, I think one of the most successful VC funds, has like 10% of climate tech startups now in their portfolios. So, like maybe Christina, you're already starting your investment activity and did your first investments. Do you experience that as well with the kind of startups you're looking at, that there is more competition, or maybe also more partners for cooperation and other investors looking at same type of companies, or is it still kind of a market that where there are less investors looking at that you're looking at?
No, I would fully agree to what you're saying, Max. So there is actually in the rounds, for example, in the rounds that we have invested in, so there are classical VC investors in, there are private investors in, there are also other impact investors in. So I think there is a lot of collaboration, which I find actually very positive for the whole field. So in a very short answer. So there are syndicates. This is our experience. So, and also maybe something to share. Actually, there is also, sharing of deal flow. So it's not. I mean, it's not that like that. It's so super protective that you would not approach, I don't know, any other impact fund, or there is actually this active collaboration, which is great actually in the field from our experience.
What we see when we put together many investors in a transaction, that there's a huge amount of collaboration. So usually we need to have one so-called lead investor who goes in, giving the others also some kind of security that over the lifetime of the transaction, he will care most and be really in strong interaction with the social entrepreneur. And the whole, the whole field, I'm coming from a more classical financing background, is very collaborative compared to others. We also had a question now from the audience. Maybe we hand over to you.
I was just writing down what you said. My name is Chiara Gerlich and I'm from Jugend eine Welt, Don Bosco Finanzierungs GmbH. And so we are an NGO. We also have a company which we created especially to emit a bond. So in German it would be an Anleihe. And what we've realized this time around, because we've done this 3 times now, and now we are facing a lot of problems with the regulatory processes with banks and things like that. So, and we're also facing difficulties in collaborating with with some of our partners who we've partnered with before. So my question is, how have you experienced this? Because now you've painted a very positive picture about bonds and how, private actors are also more interested. And I think that's a great development. I don't question that. But there are a lot of regulatory problems which you can face depending on your legal entity and which kind of position you're in the market to emit this kind of very innovative financing tool, which for us as an NGO gives us a lot of opportunities to support through channeling funding at a much larger scale, right? So real impact investment basically is what we're able to do, but we're facing a lot of regulatory challenges with MiFID II, for example, which I've only learned about this year. So it's like been a tough year, basically, So maybe you could talk about that a little bit.
Great, thank you for this great question. Is there anyone who would like to take it?
Yeah, maybe I can jump in. Sorry, Max, did you want to start?
No, go ahead, please.
Okay. So thanks so much for that question. I mean, if I could share basically from the insights of a private equity fund, because we are basically, we are no bond, we're not debt fund, we are pure play equity fund. We face the same constraints, right? On the regulatory, on the legal side, those things are really strict. For example, if I speak of the Luxembourg environment, for example, all those SFDR regulations as well. On the other hand, this is this whole sustainable financial disclosure regulation. But on the other hand, this is also, there is no way around these days, right? Because those are the European regulations. For example, so our fund complies as an Article 9 fund, which means like this dark green fund. And this also costed us a lot of extra effort, to whatever, include additional paragraphs in the prospectus, on our website, on whatever. But I think probably most impact vehicle faces these challenges. So that's nothing, I would say, particular for a bond or a debt fund. So I think this is true for most of the impact vehicles, that those regulatory challenges exist, and we have to cope with them.
Yeah, I also think, in the end, I can talk about equity funds. So they raise a lot of money, so there's a lot of responsibility also coming with it. So I think it makes sense that there's a certain regulation, and you have to be registered as an alternative investment fund manager. But also what you are saying, I think there's more regulation coming around impact investing and what is actually considered a climate relevant investment around the EU taxonomy, the SF DR. Yeah, exactly. The Article 9, where you have to disclose kind of what are the climate relevant investments that you're doing. And I think that the intention is very good, to avoid greenwashing and to really have a common language around what is impact or climate impact and to define clear criteria for it. The challenge we're facing is right now that it might go a bit too far, especially for venture capital funds that invest in new technologies. Sometimes these the regulation or the definition for what is actually considered a green investment is quite narrow to avoid greenwashing, so it's good, but sometimes it doesn't really fit the business model of a venture capital fund who's investing in a new technology, so they have 4 or 5 years investment period, and sometimes today don't even know what will be the cutting edge technologies they might invest in 3 years' time. So defining very narrow, strict categories now might also limit what we consider green investments, and might also lead to the fact that a climate tech fund who is fully focused on environmental and climate impact cannot report the whole portfolio as being climate relevant or green, just because the definition is so strict, and that would be a pity, because it could have the opposite effect that resources are directed to old technologies that fit better into these kind of categories.
Anything from your side? What kind of restrictions did you experience so far when setting up your fund?
Well, I can say that maybe this is one of the best times to raise money, because of the huge liquidity, the low interest rates. The environment is so conducive for such thing, but there are strict rules of the game, and we all should comply with them. What Max mentioned, the greenwashing and the impact washing, which is another thing that is hotly debated and will be debated in the future. All these regulations are trying to really fight this kind of behavior from some of the players in the field, so we should comply with all these things. For instance, the SFDR, or the Sustainable Finance Disclosure Regulation, that came in force just in the beginning of this year, and some of it will come into real force in the beginning of next year, is something to which we all have to adapt with all of the disclosures needed. But the ultimate goal is to be really easy for the investor who will provide the money, or the end client, to really trust that you're not just playing with the money. You are doing, you're walking the talk. You're doing what you say. And it, of course, goes hand in hand with the measurement of the real outcomes that you produce alongside the financial returns, which is in the heart of the impact investing. So it's hard, but it should be there. That's what I can say about the regulations.
Maybe I can quickly add to that. I so agree, because I think as an impact fund, I mean, it's, anyway, we all know that, right? We don't need to discuss this, that the measurement of the impact is key, right? The big challenge, we have talked about it now, is this whole impact washing that's going on in the sector, and that there are still no real, let's say, no standards out there how to really, I mean, there's the definition of the GIN, of the Global Impact Investing Network, how to define impact investing, but still, so I think that the minimum you can do and you must do as an impact fund is, of course, to measure the impact, but you could go way beyond, actually. And I think as an impact fund, or not impact vehicle, be it a social impact bond or whatever, right? You should also go a step further, and because, and I tell you why it's important, because this will help our sector to gain that integrity that we so strongly need, and this transparency that we need in the sector because of this impact washing that's going on. So basically, measuring the impact, and it's not so complicated, is a key thing. But then beyond that, I give you a few examples. You could tie your performance fee, the fund carry, to the creation of the positive impact outcomes next to the financial hurdle. Or you should actually really define that impact intention in the fund document, right? Then you could do a whole lot more things to be transparent on the reporting side. And we could discuss this at length, but I'm just saying, it is maybe sometimes it's a bit painful, but in the end, it will help the whole sector to grow with integrity, and to be able to scale. This is what we need in the sector, I think.
Because impact measurement, I think, is really super important, and there was a session yesterday about it as well. And at EIF, we also push funds to measure impact funds, and also, like you were saying, tie the carried interest, so the performance reward basically for the fund manager to achieving certain impact goals in their portfolio, to make sure that the investment decisions are aligned with creating impact. And when we started to do this, other investors that invest alongside with us in impact funds were a bit critical of that, or maybe didn't know really how to do with it and deal with this kind of tying the carried interest to impact measurement, because they were afraid also that fund managers might get demotivated, that it's getting too difficult for them to get into the carry, or they get distracted by measuring impact. But this attitude is also changing, and it's being seen as something more positive also in the fundraising process of fund managers, exactly for this integrity reasons, and to avoid, because it really avoids greenwashing. If we hear in the news about DWS in Germany, I don't know, maybe you read about it, the subsidiary of the Deutsche Bank, who had huge issues about their ESG reporting. Also, larger banks, they're looking for investment opportunities where they can actually report that this is real impact or of their investment, and their clients are also asking for it. So they start really liking this methodology of impact funds to tie their carry to measuring impact, and it's becoming really a sales pitch or for impact funds that they offer this kind of methodology and tie their incentives to it, rather than being something where investors say, well, what's that? Huh? I don't know. I don't trust this. So that's interesting to observe that this is getting more important and more on the minds of investors.
Do we have questions on Slido or in the audience at this point? Yes, please.
It's a follow-up question to an example you gave about basically sectors being too conservative and preventing funds to invest in real innovative technologies. I just wanted to ask you about potential examples. And I like the idea of switching from those sectors that are boxes and can be limited to actually the KPIs and tracking on the metrics and basically saying that this is the impact and this is what we take for granted, not whether the innovation fits in a box or not. So I'd like to hear some examples from your experience, maybe.
Yeah, exactly, because I think the impact measuring, I know that there's a kind of need for standardization and to compare better what kind of impact is created, but it's also always a case-by-case decision and very much depends on the business model of a certain company. And for example, well, if we think about digital solutions in the climate space, I was talking about a list coming from the EU that is clearly defining activities that are considered climate relevant, and this list is very much inspired from more debt infrastructure kind of investments, clear, like, let's say, energy efficiency measures in buildings, exchanging CO2 intensive stoves, for example, for less CO2 intensive stoves. So very, very concrete kind of activities. But for example, a digital platform that can be used for different purposes, for tracking CO2 emissions, that has maybe, or recently one of our funds invested in a trading platform to trade electricity prices and to level electricity prices in the grid better, which kind of evens out the fluctuations in the electricity grid caused by renewable energy, and that way, like, indirectly contributes to a better environment for renewable energy to be added to the grid. So to capture this in a very narrow list is very difficult, and that's why we're a bit concerned about being too narrow in this sense, because if you can't say, well, this is relevant, then maybe people will not invest in it.
I would like to raise a question regarding deal flow, as all of our funds are quite new. So maybe Hristo, you would like to start. Do you see a good deal flow for your urban impact fund?
We definitely see a good deal flow, though we are not marketing ourselves, heavily at this moment. There are different investment opportunities coming to us in all 4 directions that we look for, which I mentioned earlier. So quality. Really quality opportunities that some of them you would like to invest instantly. For others, you see your role there to help them not only with the money but with your business experience, helping them scale and do the good things that there are for in a better way. So. For now, we are quite confident with what we see, and we know that once we announce our first close, we will be flooded by opportunities that we have to really assess. I believe that more of the younger generation entrepreneurs, not only the younger generation, but mostly are coming from this generation, are taking care of doing good beyond just making business, doing good for the planet and the people, as we say. So I do expect that we will see more and more quality proposals coming to us in the upcoming months. So really happy to see that. It means that people are really caring about the burning issues.
Christine, did you see any change in your deal flow when you started to compare to now?
I would say across, Alexandra, our experience across the last 2 years is really that even like 2 years ago, there was already very strong, interesting deal flow out there. We can only confirm that, and I think it's getting more and more. And this, I think, relates very much also to what Max has said at the very beginning, that the SDGs just provides tremendous transformative business opportunities. And yes, definitely also from our side, we really see super interesting deal flow, quality deal flow. So this old argument that was always around in the impact space, that like kind of institutional quality deal flow is not there. I would not agree to that at all anymore. What, for example, I could share basically from our fund when talking to, let's say, really interesting companies that maybe, the really interesting guys also usually can pick and choose the investors. And for them, impact investors are usually very interesting for those core regenerative companies, because they are actually really willing to collaborate on the impact side. For them, they really want this, basically. And so it's a give and take. And this is what we have experienced. So that, so they really very specifically ask you for your value add as an investor. And then when you can bring this value add on the impact side, then it also opens up doors, on like, very full rounds, for example. Yeah.
Great. Questions? This is time to interact. Otherwise, I guess Max.
I would have a question.
Yeah.
Yes, maybe on because you were talking about deal flow. So great to hear. And also confirmation that the deal flow is there and getting bigger. Maybe on valuations. What do you see on valuations? Because we see in venture in general valuations rising, getting larger and larger. Fundraising rounds are getting larger. Do you see the same in the type of businesses and the markets you invest in?
Yes, absolutely, Max. So in particular in the food space, so the valuations usually are really high, right? Food and food e-commerce and what we have observed. So I absolutely agree. On the other hand, what's interesting is that many companies that we have looked at lately and also the companies where we have invested actually kind of have COVID-proof business models because they have these transformative business models, so they are kind of not dependent on the crisis. Yes. I think maybe in short, I could share a lot on that, but I think that's the short answer.
That's also what we at Phase just see. It's the markets. It's a very intense time, and it's really moving. And especially valuations. Sometimes even it's going like a little bit crazy. I would say you can't really justify because. There's so much money coming in and it has to be invested, and I think this is so closely related to valuations. But on the other side, we are working also a lot with very decent social entrepreneurs who come with very decent valuations go in. So will be very interesting when these expectations go together and so that's what we observe right now. Hristo, from your side?
Could not agree more. Yeah. And it has to do with this huge liquidity that we see and too much money facing it and chasing too few deals, as they say. But I don't think that it's all about the valuation. It's about what you can do together. You as an investor and the entrepreneurs. In venture capital, it's all about the good teaming of experienced people. It's not just picking stocks in the stock market and trying to make money on the movement that is there in the market. In venture capital, it's much more hands-on. And you should have first of all, good chemistry, feeling each other in a good way with the entrepreneurs, and then seeing your value added, and not just being part of their journey, but really helping it to be a better journey. So valuation is important, but at the end of the day, if there are all the other important factors, I think the deal will be done in a mutually beneficial way.
So you don't feel like we're already at the beginning of a crisis or a bubble, maybe that is being built here.
Yeah, exactly, and therefore, I think as an investor, you should have a very clear view on basically the various different scenarios, right? So you should base your valuation that you calculate not only on the management case, but make a few different scenarios, look at the milestones, so look at this very, very intensely during due diligence. For example, you made that statement at the beginning, Max, that you said, well, also, strategic, like corporations are making those strategic investments into impact-driven companies. We also observed that a lot. For example, in an investment that we have made in the food tech space, a huge Swiss and this was in the cultured meat sector, actually, a huge Swiss traditional, it's not a secret, so that the press release is out there, meat producer basically made a huge, but like very large 5 million strategic investment in that round, because they know, right, that the markets are transforming, that there is a need to change. So I think also this pushes valuations up, but this whole need for change from our observation. But of course, during due diligence, we all have to be careful and have to challenge those valuations. Mm-hmm.
Yeah, you have please go ahead.
It's not a question, it's just like confirming some of the things you said. I come from Social Business, so we are debt investor, so valuation is not like for now something that is relevant to us, but just wanted to confirm on the topic of the deal flow, like what we observe at the moment is even with the crisis, even with COVID, even with some of the economies we are investing in still very much hit by the crisis. We invest in Colombia, Brazil, Uganda, Kenya and India. So still talking about curfew and lockdowns, that there is no shortage of great entrepreneurs and of great social businesses that actually survived through the crisis, are now thriving, and as you said, basically are system relevant, as we kept saying throughout the year, and continue to operate. And so I think it's a good time now to double down and to leverage this interest that everyone has in transforming food systems and in being ESG compliant and everything, to just like attract more funds in this sector, because on a global scale there are solutions and they really need the funds to grow and scale.
Yeah, that's great to hear. Yeah, and I also think, I mean, valuations are getting bigger, but there's an overall market trend also confirming that, and this need for transformation of huge industries. So I hope it's not a bubble. I don't think it's a bubble. I think it's justified in the market trend. Let's see where it goes.
Yeah, what I would wish for is that we just talking about institutional investors right now, and I think all of our funds, they have like minimum investing amounts. What would be great to achieve that change and to go together would be that also individual investors with lower amounts could participate in this. And we also spoke about regulation, so this would be needed, and we need a big leap to get there. And it's not really possible now. There are of course some crowd investing platforms, and they are getting stronger, which is a really good development. But we could really do more, so to bring everybody on the plate. That would be lovely.
Mm-hmm. Fully agree. Mm-hmm. So, but this would, as you said, Alexandra, right? This would need regulatory changes on the European Union level and in the member states. Right now, we heard it in the audience, through MiFID II, and like, I mean, this is there's just this barrier where you need to be a professional investor in order to invest at least in an alternative investment vehicle. So I also really hope, being a lawyer, that this changes over the next 10 years. And I think there will be a lot of changes by blockchain, and in order to achieve more democratization on the impact side.
Yeah, maybe to mention also in what EIF and the EIF fund of FASE and Avesco, the fund manager is Avesco, have created this EIF fund together, and the role of EIF in this is to give risk mitigation. So of course this is also only available to these semi-professional and professional investors right now, but it could be a case that there's a guaranteed portion in the investment, like EIF does. So it's 20% of the fund volume is guaranteed to 80%. So if there is a shortfall, EU via EIF will come in, which is a great feature. We would need more like of these innovative instruments also. Yeah. Hristo, do you see anything you would like to add from your angle, what you would wish for?
I wish we could start as quick as possible investing. because there is a need. We are all responsible for the future of our cities, of our life, of the planet. So we really hope that we can do our job by the end of this year and then really start deploying capital into the most promising, most impactful businesses that we see. And I would love to see much more impact funds, convincing investors to give them the trust, because trust is really important in the finance, and give them enough fuel in terms of capital to channel it to the hottest problems that we face, because the time is really running, and we have to take our responsibility and be there for the better of our lives.
Yeah, that was a perfect closing segment.
It sounded like a political speech, but at the end of the day, it's really important, and I think most of the people are already believing in that. So I hope that the future is bright, though it might be a bubble. Now, bubble times, but there are things that will persist, and impact investing is one of them for sure.
Right. So thank you all my fellow panelists. Thank you to the audience. Thanks to Daniel and Lena. But it was great to have you here.
Thanks a lot.
Thank you.
Bye,
Christine.
Christine.
Thank you. Ciao, ciao.
Bye.